In this video, I want to talk about a few reasons why I will be going all in on income investing starting next year. Currently, my portfolio is split between high-yield income funds and real estate. Real estate is actually a larger percentage of my investment portfolio in regard to the total price appreciation, so next year I have decided to sell a rental property and go all in on income investing. Let me break this down. When you become a real estate investor, the first few years are usually the toughest and the hardest to make any cash flow. Think about it. You have to come up with the down payment, pay the financing fees, land tax, transfer fees, etc., as well as making any repairs necessary to the property before finding tenants. And you're hoping you find good tenants soon, so the property does not sit empty while you pay the mortgage. Now once you have tenants in place, you can begin to get your debt paid down and potentially scrape some cash flow off the top. Again, the first few years are usually the toughest, as your monthly payment is typically the highest it will ever be. It typically takes at least 5 years of consistent mortgage payments before you can renegotiate for a better term. During that time, you're also keeping an eye on interest rates and hoping that they don't jump higher than the last rate you locked in. It's a constant game of keeping your eye on one specific market segment, and you have to be really switched on, raising rents, maintaining the property, and all the rest. Remember, you leverage the debt and the buck stops with you. So, why get out of real estate to go all in on income funds? The reason is simple. I will streamline my portfolio, increase my yield on my investment as well as removing any unnecessary repairs, tenant issues, and overhead costs, like insurance and management expenses. There is a lot of argument for holding real estate as a long-term investment, and indeed, it is a great investment. There are countless stories of people becoming millionaires with real estate, and it is a great tool to get started on the path to building wealth. However, streamlining a portfolio to simplify life and increase income is a net positive at this point. No more chasing down rent checks, dealing with repairs, or worrying about fluctuating market conditions. Income investing is simply a more predictable and less stressful way to grow wealth over time. It aligns perfectly with my evolving investment goals, which prioritize stability, consistency, and peace of mind. The beauty of income investing lies in its simplicity. I have a lot of faith in the income style approach, and I feel that the diversification of various sectors compared to one property is actually much safer. Think about it. You're invested in entire economies, billion-dollar companies across multiple sectors, rather than a single property relying on one set of tenants to pay all the expenses. We are seeing a massive influx of capital into the high-yield income space in the last while, and it seems as though the trend is going to continue. We have more funds being created by more providers, and it is driving competition in yields. We are witnessing a boom into this style of investing that was perhaps once upon a time reserved for older retirees. The income strategy has now become a staple for investors for all the various reasons we discuss here on this channel. Bottom line is it gives you income, income gives you options, and options can give you freedom. More and more investors are recognizing the benefits of this strategy, particularly in today's uncertain economic climate. This surge in popularity is reflected in the growing number of income-focused ETFs and funds available to investors, as well as seeing their AUM explode. One such example is HYLD from Hamilton. With an AUM of over 600 million, it seems to be gaining by the day. I recently watched a video of a real estate investor detailing rental income and how it can be inconsistent. I have to agree. At this point, I want consistent, reliable income, and don't want to be on a vacation halfway around the world worrying about a missed rent payment or a last-minute repair. The trade-off is higher yields with the stock market rather than longer-term capital growth and appreciation with physical real estate. However, if you're constantly reinvesting a portion of your dividends, you should be maintaining the integrity of your investments and even growing your dividend payments month over month. This is another difficult aspect of real estate, as it's difficult to raise rents because they can typically only be increased once a year, and even then, many provinces have rent caps. So, although in Canada being a homeowner and landlord is highly coveted nowadays, real estate is always a hot topic here. I am confident that making this decision is the right one. As overhead expenses on real estate continue to soar, and screening tenants and maintenance become more and more arduous, I am happy to be jumping out of real estate and jumping headfirst into the income investing world. I hope you enjoyed this video. Please do me a favor, like, and subscribe and leave your thoughts and comments down below. Remember, invest early and invest often.